Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. A railroad and a technology company top our list of growth and income stock picks this week. Todd Bunton, our growth and income stock strategist, here with us to give us a rundown on both of these companies. The railroad is Norfolk Southern Corporation, NSC, the ticker symbol.
That's right, yeah. They operate mostly on the eastern seaboard of the United States, heavily tied to the commodity industry. Actually, coal is their biggest segment. A very economically sensitive company, as you can imagine, too. Good economic bellwether, and the economy must be doing okay because they've been crushing it. That was on display in the third quarter. The company recognized higher revenue in all of its business segments. That led to significant earnings per share growth because a railroad like Norfolk, just like the others, have a relatively high degree of fixed expenses. So when you get solid revenue growth, that can lead to significant earnings per share growth because of operating leverage. So it's a good growth story here, and the CEO actually noted in the third quarter press release that he's seeing modest improvement in most of its business segments. So that's definitely good for the economy, good for Norfolk going forward. And when you take a look at the pricing consensus chart, you can see analysts have been raising their estimates over the last several months, and they had a nice raise after the last earnings per share beat. So they expect solid growth to continue this year and to carry into 2012 as well. Based on consensus estimates, they're looking at 36% earnings per share growth this year, 12% growth next year. And if you read the analyst reports, analysts even note that their estimates for 2012 are relatively conservative, so they expect Norfolk to beat those as long as the economy doesn't slow down. Because like I said, it's a very economically sensitive business, not just being a railroad, but being tied to commodities as well. But good growth story as long as the economy does all right, and a good income story as well. They pay a dividend that yields 2.3%. Now, they actually raised that throughout the Great Recession, held it steady, and had a couple raises in there. And they've raised it 3 times since mid-2010. So it's a good income story here, 2.3% yield, like I said, and you're getting it at a great price. It trades about 13 times forward earnings. This is a discount to the industry average of 17 times, PEG ratio of 0.8 based on a 5-year growth rate of 16%. So there's a lot of upside here, again, as long as the economy continues to at least chug along at a decent pace.
All right, let's talk about that technology company, Seagate Technology, STX, the ticker symbol. What's going on with this one?
So they manufacture hard disk drives, and that's a medium for electronic storage. They supply computers, digital video recorders, enterprise servers, mainframes, workstations, and the company's in actually a very unique situation. Their competitor, Western Digital, and a couple other competitors have significant production facilities in Thailand. Well, if you've kept up with the news, there's been significant flooding in Thailand, and that's literally wiped out the competition. So
that's a problem.
Yeah, but it's an opportunity for Seagate. So you're going to see higher prices in HDDs, hard disk drives, over the next few months, maybe few quarters, few years, analysts expect, and Seagate can come in and take a big market share. So they'll be seeing higher prices, higher market share, should lead to significant earnings per share growth. When you take a look at consensus estimates, you can see analysts expect 65% earnings per share growth in 2012, 35% growth in 2013. Now, management actually came out, they released an 8K, so that's just an SEC filing, and they noted their opportunities here in early November. So that was the catalyst for analysts to raise their estimates, and the share price spiked higher as well, but you can still get it at a really good price here. They trade about 9 times forward earnings. It's a discount to the industry average of 12 times, so it's still a good price. And you're also getting great income, too. They pay a dividend that yields 4.2%, so there's tremendous total return potential here.
Do you own either of these two?
I do not.
All right, we have other stock picks for your review, and those you can find on our homepage. You can link to them off our homepage, zacks.com, if you're not there already watching this particular video. Stock picks in each of the investing categories that we write about on the website. With Todd Bunton, I'm Terry Ruffalo.